Increasingly, we think financial markets in the U.S. are pricing in an ideal scenario of recession avoidance and a continued downward trend in inflation, with investors seemingly shaking free of bearish sentiment around weaker growth and sticky inflation, leaving U.S. stock valuations appearing elevated for a global economy approaching stall speed, meriting a cautious view on risk-taking. Let's take a closer look. Over the past month, U.S. equities continued their upward march, including some broadening of performance away from solely mega-cap tech. This has brought the forward price-to-earnings multiple to nearly 20 times earnings for the S&P 500 index, notably above our long-term fair value estimate of 17.5. While we have seen surprising resilience from the U.S. economy, with help from the services sector, we think the cumulative effect of tighter financial conditions has yet to fully materialize, and persistent wage growth may keep core inflation high. Meanwhile, conditions outside the U.S. are showing clearer signs of deterioration. The European Central Bank's hardened stance against inflation has added to concerns that it will worsen an already struggling European economy. While far cheaper valuations for European equities at least partially acknowledge the more difficult conditions, sentiment is likely to remain an obstacle to equity performance. And China's economy continues to underwhelm. The government may introduce economic stimulus in an effort to jumpstart the disappointing reopening from the pandemic lockdowns, but we're skeptical that it would be enough to meaningfully alter fundamentals or investor sentiment. As a result of these conditions, we've maintained our modest underweight allocation to risk assets in our global policy model, which guides our multi-asset portfolios. This includes underweights to equities in the U.S., developed markets outside the U.S., and emerging markets. We maintain our overweight positions in high-yield bonds and natural resources, alongside a small overweight to cash and an underweight to investment-grade bonds.